Hello and welcome to another Divergence University review. My name is Jordan and today we're going to go over, as per our tradition on Monday in the beginning of the week, going to go over this table showing some of the interesting setups that we've personally been following during the week. Actually, the previous week and the week before that. Previous week I couldn't do the video, guys, so basically 28th up until the 9th, but as we can see there were no that many opportunities, again, at least according to us, right? So we can, technically speaking, go over pretty much all of them if it wouldn't take that much time. So let's begin, start from the top. Dollar franc sell opportunity, switching to blue here. Push up, right? And even if we consider this, by the way, I'm going to talk a bit about waves or cycles, but it's kind of a must here. So even this is 1 hour chart alone, even if we consider this a bullish structure, bullish setup, then this thing ends with divergence and convergence. So I would be technically expecting two waves to the downside, right? And that would be the first push. Then we see a double wave up, divergence pretty much everywhere, and we have the false breaks, and we're kind of testing the zone where the price stopped previous time. So this kind of setup, at least in my opinion, makes sense. Next on the radar is Aussie yen. Aussie yen, pretty much we can relate to the same thing. Push down, push up. Okay, it stopped. So now we have multiple scenarios. But reading the most recent events, which at least in my opinion goes like this, absolutely the same story. We end up with divergence, bearish structure, which even if this is considered somehow a bullish structure, right? This one is much larger than it. So that would be the worst case scenario here. But still, this one remains valid, right? Because we never broke above this high. Back to the most recent events, divergences followed by convergences, and here we have another bearish structure. So big one, middle one, smaller one, and here you start to get, actually let's draw it like this, the inner waves, which actually build up the bigger wave. Usually what's done is if you're going with the histogram divergence alone, that could be an attack already, right here, or you do some kind of trend line training, whatever it is. That could be the first one. Tiny protection would probably kick you out. If you're trading the big structure, then you're probably going to survive this, right? Because then your stop loss is right here. So in the second wave, first of all, we have a larger wave now, bigger structure. We still have the levels, but now we have the MA's divergence as well. Okay, so this one starts to look much, much better. Come on, starts to look much better than this specifically, right? I mean, at least the way I'm looking at it. So that's about it. Aussie franc, looking for the buys. The whole idea here was starting from the daily chart, multiple divergences, 4-hour chart, multiple divergences, plus the false breaks. Then we got the breakout here, push up, right? And hidden divergence, first attack, two waves, false break, but this is still holding, right? So two waves looking for continuation to the upside. This one bank, and this is the first one, right? On the first wave, very deep pullback, coming almost close. Now, in this case, because we're using 1 to 2, so we have 1, 2, right here. Look where the target goes. right there. And now you have a pretty much tough decision to make. If this is the resistance zone, do you want to protect here the swing lows and have a target here, or you want to have a target which is at the very limit of this resistance and have a bit more aggressive target, stop loss. But you can have both, right? Because you gotta stick with the 1-to-2 risk reward ratio. If you're doing 1-to-1, then it's easier, right? Then you do this and that. Then it's fine. But in this case, that's the more interesting part, at least in my opinion. Oil. It started with the slowdown, even on the daily chart. We got multiple divergences. We got the convergence. Now, the problem I do see with this convergence is that the convergence couldn't create a close below. This is usually not a good sign. Okay, it automatically becomes much riskier setup. The rest looks good, right? We have the false breaks, we have the divergences, we have the breakout. This is supporting, MAs are pushing lower, holding the high. We got the hidden, etc., etc., etc. But this is one small concern which I have. Those remained on the top. So after Aussie franc, we're looking at Euro-Aussie, which started ranging here for a very long period. I mean, look at it. If this is considered the trend, so let's say somewhere from that point, which is end of May, we've been stuck in this zone. And for me personally, that becomes a sell or buy opportunity, because ranges, we take the bottoms, we take the tops, and we trade them. Now, in this case, again, multiple false breaks, it's kind of expanding, right, to the upside. Some might be drawing it like this, but it doesn't matter where at the top. We have a false break here, we have a false break there, and we have a false break here. Besides all these false breaks and the divergence, and go to the highest point. So from this point, there would be divergence. From this point, I'm not sure. But look at the candle. This is a massive rejection candle. This one I definitely like, especially when we compare it to oil during the breakout phase, right, of the consolidation. The price action, remember that price action is telling you a lot, and you gotta learn how to read it. Dollar franc, push up, consolidation, continuation to the upside, finally breaking above the zone, holding the zone, pushing up again, and now notice what's happening. One leg divergence right here, and trying to create, not trying, it actually create the convergence, close below and all that, right? But since this is one leg divergence, you can always expect, if it doesn't move super fast, you can expect for the price to create another green histogram, which it managed to do first time, and then second time it actually managed to break above. So now you have multiple false breaks. Now you have second divergence, even from the MAs, one failed convergence, and I'm pretty sure we have divergence on the higher time frames when it comes to this one right here. So it starts to look like a possible pullback is coming, and once this low is broken, that could be even treated as pullbacks and sells. Of course, we need to see the price, sorry, not the price, the histogram here and the MAs, basically creating the convergence, right, not the divergence when this breakout is happening. Aussie franc, this one we showed, and oil we showed. So this is those are actually some of the interesting examples, at least according to us, and the instruments that we've been following in the previous week. Wishing you an absolutely fantastic work week ahead and trading week ahead. If you have any questions, you know where to find us, guys. Ladies and gents, have a good one. Bye.